On Wall Street, not even those kind of sort of better than expected retail earnings could stop the Dow from falling for a fifth straight session, even if the loss today was comparatively modest. One Dow stock in the spotlight, ExxonMobil, it ended lower today, and that means it has lost ground in 19 of the past 20 sessions. The Dow today down 7 points, but still closing above 15,000, just barely. The Nasdaq was up 24 points thanks to the strength of tech stocks, and the S&P 500 added 6. Emerging markets struggled again today, though, with higher Treasury yields continuing to drive investors into the dollar, and that sucked money out of a host of foreign currencies, especially in Asia. Today, the Indian rupee tumbled to a fresh all-time low against the dollar.
Well, those tumbling currencies and stocks in emerging market countries thousands of miles away from Wall Street are the latest worry for American investors. Joining us now to talk about why, Nick Colas. He's chief market strategist at ConvergEx. Nick, nice to have you on the program again. Let me just ask you, why are American investors worried about the emerging markets and those sell-offs there? Connect the dots for us.
Sure. There's really two factors at play here. The first is that we typically think of emerging markets as being very fast growth with young economies that are really ripe for a big step function increase in GDP growth and consumption. And that growth is really tempered around the world. The classic BRIC countries, Brazil, Russia, India, China, aren't growing as fast as they used to. The smaller countries that you alluded to in the prior segment, Southeast Asia primarily and India, might have small and growing economies, but they're also still very fragile economies. When you see this kind of volatility in currencies, people really take notice.
Nick, is this a short-term sell-off in the emerging markets or something more enduring?
It feels like it's going to be a little more enduring than just this week or next. And the reason for that is the uncertainty behind the Federal Reserve policy of tapering or reducing the amount of bonds that they go out and purchase every week. As long as we're uncertain about the path of that tapering, we're going to see this kind of volatility in currency markets around the world, and that'll lead to the same kind of volatility that you've just seen in equity markets as well.
It was interesting listening to a lot of the chatter about this today on Wall Street. There were some strategists saying that with these emerging markets in trouble, some of the money that they have invested in those countries will be coming into the U.S. That'll be good for U.S. markets. Other strategists talking about a possible financial crisis as a result of all of this, a la the Asian crisis of 1998. Do you agree with that? And, you know, what should investors do?
Yes, on the second point, I think it's way too early to really panic and worry about an Asia crisis like we saw in 97, 98. Some of the initial ripples are there, but we're very far away from it. So I would take that off the table for now. I think for the moment, however, investors are basically taking a very much of a wait-and-see attitude on equity markets around the world. They appreciate the fact that the U.S. market has rallied a lot over the past year, and they understand the U.S. is still a great place to invest. But with the kind of gains that we've had over the past 1, 2, 3, and 4 years, I do get a sense from clients that they're a little bit hesitant to put a lot of fresh money to work here. They want to see how this tapering situation works out with the Federal Reserve in the near term.
Compare for me the prospects over, let's say, the next 2 years for equity investors in U.S. stocks versus the emerging markets. Does the U.S. have the edge now?
It feels very much that the U.S. has the edge. Not only do we have a slowly growing economy, but we have a lot of benefits of a large and established economy, like the rule of law, like very consistent trade policy, and other factors that make investors very comfortable in U.S. stocks. So for the near term, it does very much seem like U.S. stocks have the upper hand over emerging markets, even with the promise of somewhat better growth overseas.
So are you saying that bad news in the international markets is actually good news for the U.S. stock market?
You know, it hasn't worked out so far that way for the year. For the year, actually, emerging markets are down roughly 13%, U.S. up 15%, so the numbers aren't really there. However, over the past 5 days of market volatility, emerging markets have begun to do a little bit better, and investors are taking notice. They're actually putting more money into emerging market funds than they are into U.S. stock funds over the last week. So perhaps we're seeing a little bit of a turn there.
Well, that's fascinating. Nick, thank you so much for coming on the program.
Thank you.
Nick Colas, Chief Market Strategist at ConvergEx.